What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, I want to go over with you the two trades I took today, Tuesday, in the New York session on the DJ30. All right, we're going to keep this simple, keep it quick, to the point. I'm hoping that it makes sense for you. All right, but we have to remember that each trade is unique. All right, just like every trader is unique. So even though we might be trading using the same system, the same strategy, at the end of the day, I see the charts how I see the charts, and you see the charts how you see the charts, right? We see things differently. So you might not be able to trade exactly like me. This is a pretty discretionary system. I have my own experience with the market, my own thoughts in regards to how to trade, how to interpret price action, all of this stuff, all right? So what I'm doing is I'm sharing something that I'm passionate about with you. And if it helps you in your own process, that's even better, okay? But do your thing, all right? Look at your charts, come up with your own ideas, all right? Do what you got to do, and don't let anybody else make you start second guessing yourself or anything like that, all right? So on your screen right now, we're looking at a 5-minute chart. I'm simply showing you Monday, all right? I want you to see how Monday traded. It was a pretty choppy day, all right? We're looking at Monday, and then we're looking at Tuesday's Tokyo and London session, all right? And the point of this chart is I'm showing you, I marked off the low from London, the high from New York, and that's the rectangle that I'm projecting onto Tuesday. Those are my high and low that I'm interested in. Those are the levels I'm interested in, okay? So here we're looking at a 1-minute chart of Tuesday's Tokyo and London session, all right? We can see that we traded lower through Tokyo, lower still going into the London session, where we lock in this low of the day peak formation here, okay? Retest that in the middle of the London session, okay, and continue to go higher. Then here at 6 a.m. we have this major spike that spikes through the lows, not only the low of the current day, but also spikes through the low of the previous day, all right? And then price comes up back inside of that range and starts to auction higher, all right? Now, I don't know what happened at 6 a.m. I'm not worried about what happened at 6 a.m. Maybe Trump put out a tweet. Maybe there was major red news there. I don't really care about that. All I care about is what happened, all right? We locked in a low in the Asian session. Then we spiked through that low at 6 a.m. And now we're climbing higher. To me, this looks like we are now in a small uptrend on the 1-minute chart, okay? Now, when it comes to trading, taking our trade, we only have two choices. We're either going to buy this thing or we're going to sell this thing. So if we're in a small 1-minute time frame uptrend and we're looking to sell it, obviously we're looking for a reversal pattern going into our timing window, okay? We're looking for an M at the high of the day, or a triple top, head and shoulders pattern, something, right? A peak formation high. We're looking to lock that in and start trading lower. Okay, if we're taking a long trade, then we're trading alongside of this trend, and I want to take this trade off a pullback, right? Or I want to see a stop hunt back against the uptrend for my entry, all right? So that's the plan. If we're going to short it or if we're going to go long, we need to know what we're looking for, right? It's as simple as that. Right, now here we can see this green box. This green box starts at 8 o'clock. So we're looking at price action just before we get to the session, all right? Now you can see that we have broken out of the high of the previous day. Actually, that's not the high of the previous day. It is the high of the New York session from Monday. Okay, so I typed these up wrong. This is not a breakout of the current day. It's actually a breakout of the most recent high. That's what I meant, all right? So ignore that, and just know that this is a break of the most recent high. Okay, so we break out of that level, we pull back. I've marked off that pullback because that pullback is going to become our most recent low before 9:30. Okay, so this is our most recent low, this is our most recent high. Okay, and it's not like this isn't our most recent low right here. Okay, because we are looking to trade from the extremes. Okay, so this is really the low, this is the high. All right, now I've put this yellow block right here just so we can sort of look at the candles as if we were sitting down together at 9:30 and we're seeing it happen live. We want to see how the entry actually plays out and the mistakes that could be made when trading this market. All right, so you can see we have this large candle right at 9:30. Okay, that's the 9:30 candle. It trades a little bit lower before exploding to the upside. All right, it engulfs all of these bearish candles. Okay, and if we look close at the wicks, we can see that we trade right back into that high. All right, now traders might get excited when they see that spike higher. They might say, oh, look, we're going to continue this uptrend, so I'm going to go ahead and buy. That's a big old candle, you know what I mean? So I'm going to get in there and buy it up. What happens? Bam. It spikes to the downside and stops those traders out. If you pay attention, 9:31, 32, 33 trade back into the most recent low that we have here before the session opens, okay? Spikes through it just a tad, all right? And again, what could happen here? Well, that trader who went long here got stopped out. Then they see these two big bearish candles. They say, hey, look, it's going to go down actually. Okay, I was wrong. I got stopped out on my first entry. I thought we were going long, but it looks like we're going short. So I'm going to go ahead and sell this market. And what happens, right? Bam, engulfment. They get stopped out again, all right? That's the first mouse. When they buy right here, that's the first mouse. The first mouse is often the one who gets caught in the trap, right? So remember, we're either going to have, one of two options. We're either going to buy this market or we're going to sell this market, depending on what we see, all right? And I told you, if we're looking to buy this market and trade it alongside of that 1 minute uptrend, then we're looking for a stop hunt against the trend, which is exactly what these candles are, okay? We spike up, we spike down. Here's our stop hunt against the trend. We engulf. That engulfment there was not enough to get me in the market. I wanted to see that engulfment broken. I wanted to see us trade higher than this bullish candle, which we do within the next couple minutes, all right? And so as soon as we break through there and close, that's my entry. That's where I'm getting into this market to take it long, all right? And you can see we have broken out of the previous day's high, pulled back. I'm taking the continuation trade, all right? These are the trades that I took. Here was the first position, right? Stop loss below my entry candle. Take profit was not necessarily a set level. I was just holding this trade until, some time of weakness, which was here for me when this big bearish candle engulfed these bullish candles. I said, okay, I've had enough. I didn't want to give back anymore, so I just closed the trade, locked in a 4% profit here, okay? Then I was simply patient. I just waited, okay? And then right here, right around 10 o'clock, we have this pullback completing, bam, engulfment. Again, this engulfment was not enough to trigger me into the market, but as soon as we broke through the top of that wick from that engulfing candle, okay, there's really like a 2-bar engulfment. I got in right there, stop loss in a place that makes sense according to market structure, all right? So I gave it a little bit of breathing room. Obviously, I could have, tightened it up if I wanted to. There was no drawdown here, but Of course, you don't know that going into it, right? So I had to put it where it makes sense. And again, when we got up here and started trading sideways and throwing these bearish engulfments, I decided to lock it in, all right? So I locked it in at 2%. So a grand total of 6% on the personal live account, all right? Two very easy trades. This one's 4%, this one's 2%, because I lowered my lot size, okay? That's important to me. I've already taken one trade. I've locked in a good profit, so I'm going to enter again. I'm going with smaller size. That's why, this one is 4%, this one is 2%, okay? After I locked in the second trade, after I took this money off the table, I shut my screens down and I walked away, okay? I don't care how much higher it goes, because I came, I saw, I conquered. I came and I did what I wanted to do. I planned on taking these trades. These were not unplanned trades, right? So I took the trades that I should have taken according to my strategy, according to my process. That's all I need to do, okay? I don't need to capture the entire move up. I just need to get my money and get the hell out of there. And I'm glad I did, because shortly after this, the market shifted and it came all the way back down to my original entry, and it did it quickly. So I could have lost these trades, okay? But instead, I locked it in. No one ever went broke taking profits, all right? So I hope that that's simple, easy to understand. If you have any questions, comments, concerns, drop them down here in the comment section, okay? There's no such thing as a stupid question. Don't be afraid to ask questions. I accept advice too. If you got some advice for me, let me know what's going on. What did you trade today? I know that there were good trades all over the market, so let me know how you did today. This is how I did today, man. Until next time, I hope you continue to free your mind.